Hi, I'm Bruce Jugan from Benefits Cafe. What I'd like to describe are 5 tax benefits of employer-sponsored medical insurance. Before we start, I just want to point out that we're not accountants, and you should talk to your tax advisor about the information we include in this video. We're happy to work with you and your accountant to ensure that you set your plans up in the most tax-favored way. But what I wanted to point out is that benefits are not considered wages by the IRS or any other tax authority. And that's a huge benefit to employers. And that, in fact, is the reason that many companies that don't have to offer benefits do provide benefits, because it's a form of compensation to the employees that's highly tax favored. And let me just describe specifically how that is the case. One, for the employer contribution, the amount the company pays towards the employee's medical insurance, it's a fully tax-deductible business expense. And it's not taxable to the employee. So that means it's not subject to FICA, that Social Security and Medicare 7.65 payroll tax, which wages would be subject to. Medical insurance benefits are not subject to that. And also, when you make your calculation for your workers' compensation, which covers work-related injuries, the calculation is based on the total payroll. And so since benefits are not included in the payroll, you can provide this compensation to employees without increasing the amount of your payroll, and therefore your workers' compensation won't be impacted. Workers' comp can range from 3% for people who work in an office, a pretty safe environment, to up to 20% of people who work on roofs or very hazardous occupations. So that's a big benefit as well. For the employees, they also don't have to pay taxes on employer-sponsored health insurance. So they're not subject to the FICA, 7.65%, California state income tax, which depending on wages can be 3 to 13%, or federal income taxes, which can be 10 to 30%. So when the employer makes a contribution for benefits, that total amount, say it's $100, reduces $100 the premium that the employee would have to pay towards medical insurance. Whereas if they paid $100 towards wages, they have to pay probably about $110, $115, and the employee may net $70. A huge swing just because of the taxes on wages, which don't apply to employee benefits. Third, the employer contributions, when they do make contributions, can be done on a before tax basis. That's what's called a Section 125 plan or a premium-only plan. Benefits Cafe can help set that up for you, get you the plan document and all the disclosure necessary for you to do that, so the employees can make their contributions on a pre-tax basis. Number 4, California has a penalty for individuals who do not have medical insurance, and if the company offers medical insurance, that would mean that they would avoid that extra tax, which is up to 2.5% of income in California. And then 5th, for employers with 50 or more employees, what are called full-time equivalents, the Affordable Care Act has a tax penalty if the employer does not offer group medical insurance to the employees. So if you were to offer medical insurance and you had 50 or more employees or full-time equivalent employees, then you would not have to pay that tax penalty. And then I put in a bonus, 5.1, which is also a tax benefit, which is a federal small business tax credit. It's kind of a bonus because the benefit is extremely difficult for a California employer to actually take advantage of. The reason is that to get the maximum benefit from that federal small business tax credit for health insurance, you have to have 10 or fewer employees, and the average wages would be $27,000. Well, the minimum wage in California is about $15 per hour, which equates to about $31,000. So if you're paying minimum wage, it's difficult to get to $27,000. You're going to be above that, which means you're going to get less benefit. If you have 25 employees, more than 25 employees, there's no benefit, no health insurance tax credit available. However, if up to 25 employees and the maximum of $56,000 is where the credit evaporates entirely. So there is this small business health insurance tax credit. You have to purchase your coverage through Covered California for small business. Benefits Cafe can help set that up for you. We do a lot of business with them. But just know that sometimes it's difficult to obtain that tax credit. But hopefully you've seen that there's a lot of tax advantages for an employer to offer health insurance to the employees. Just give us a call. We'd love to help you out.